Hello, everybody. Let me introduce myself. My name is Mark. I'm also known as the stock market jobber. Um, I have a pretty extensive background in trading, brought into the industry by the great Mario Gabelli, traded for Steve Cohen directly, was the head of trading at three different money managers, and I've overseen all kinds of hedge fund strategies and mutual funds. I was a market maker. Anyway, at this point in my life, I've decided to give back, so as they say, I want to teach people about trading. I've seen so much misinformation out there. There's so much what I would just say is downright garbage. Uh, in the trading world here, the retail trading world, um, we focus on the important things. We focus on what price levels are important, what the sentiment is, what the momentum is. In the institutional world, trust me, I was there for 20 years. People do not use silly things like Fibonacci and Elliott wave and Gann theory. So if you want to learn how to trade, forget that stuff and just join our community here and I'll do the best I can to teach you. Please make sure you subscribe to our YouTube page. But let me tell you, I think there's a good chance now that Facebook might be about to make a big move lower. Now, charting is all about understanding investment psychology. Okay, we have certain price levels that are more important than others. Sometimes we know why, sometimes we don't. But we could start off right here. This was a support level. Then it became a resistance level. How did that happen? Well, there are people who bought here that were remorseful buyers. When the price goes lower, a lot of them say, I want to get out, but I don't want to lose any money. So if it gets back to my buying price, I'm going to sell it. So you have remorseful buyers placing sell orders at their former support level. If there's enough, the level converts to resistance like it does here. You can see the same thing down here, right? Support here, people buy, then the price falls off a cliff. They regret doing so. So a number of them say, you know what, I'm going to sell, but I don't want to lose any money. So I'm going to wait until it gets back up to my buying price and I'm going to sell it so I get out of break even. So support can turn into resistance. Support can turn into resistance. Also, we have these two, what we would call a descending triangle and an ascending triangle. Every chart needs to be looked at through the prism of what does it tell us about supply and demand. When we see this, we have the buyers who are hanging out at support and they're waiting for the sellers to come to them. They're kind of complacent. This descending line here, which is why it's called a descending triangle, shows that as time is passing, the sellers are becoming more aggressive. In other words, they're willing to take lower prices. Markets go in peaks and valleys, and when we have the peaks forming at a lower level than the prior peak, it just tells us that as time is going by, the sellers are getting more and more anxious to get out. So you have this. So this chart illustrates the dynamic, or I should say, sorry, this pattern illustrates the dynamic of aggressive sellers and complacent buyers. Regardless of the market that you're in, whether it's stocks or cryptos or real estate, or even if you're selling, I don't know, clothes, if you have aggressive sellers and complacent buyers, it sets the stage for a move lower. Down here, we have the opposite. This is an ascending triangle. The sellers are content with hanging out at the resistance level and waiting for the buyers to come to them. As time is passing, the buyers are getting more aggressive. This is why we have this ascending line. All right. So think about this. You have complacent sellers, aggressive buyers. It sets the stage for the market to move higher. So some patterns are bogus. I don't really use them. But ascending triangles and descending triangles tend to be pretty tradable. So, as we can see here. But the important thing is understanding what it's telling you about supply and demand. Now, let's go up to why I think there's a good chance that we might make a decent move lower. One of the reasons why a level that was resistance can turn into support is because of seller's remorse. People sold, and when the price went higher, a lot of these people tell themselves, "Man, I shouldn't have sold. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price. I if I could buy them for the same price I sold at." And remorseful sellers placing buy orders has converted a level that was resistance into support. Okay, now this is what we call a gap. When a market closes at one price and opens at a different price and it doesn't trade at this price range, we call that a gap. There's an old expression on Wall Street that gaps tend to refill, and it's true. Now, the reason why is We didn't have any trading in here. The stock never traded here. So therefore, you can't have remorseful sellers trying to buy their shares back, which is what is going on up here. Because the price just didn't trade there. So if it didn't trade there, you don't have, by definition, no one's buying or selling, so there's not going to be remorseful sellers in here trying to buy their shares back. So there could be a lack of support or a lack of buy orders. And if we move lower, you've probably guessed at this time, well, we would probably look to see if there was support around here. This would be my target, where it was a former support level. But anyway, that's it, folks. Once again, please join our community. Visit our website, stockmarketdobber.com. And again, if you want to be a successful trader, you need to focus on these basic principles of what's the important price level? What does a chart tell us about supply and demand? If you want to, I don't know, look at Elliott wave and that kind of stuff, I mean, you can, but that's not what I teach, because in my experience in the institutional trading world, I've never seen anyone use anything like that. This is what the successful institutional traders focus on: levels, trends, momentum, and investment psychology. All right, everybody, thank you so much, and I will talk to you soon.